Okay guys, welcome back for another video. This one's going to be a quick presentation and I'm going to go through the charts as well on a 30 pips a day scalping strategy, all right? And it's using no indicators. So it's basically using what we call load levels or ICT order blocks on a 4-hour chart, and it's also in a specific time window, okay? So I'm going to go through that now, all right? So going through bar charts then, so it's really important to understand the characteristics of a candle and how it all works to understand how this method works, right? So if you're going to look for a bearish candle, you always start with the open of the candle at the top end of the candle itself, okay? Then you're going to have a false directional move up, which creates the high of that candle, followed by an expansion down for the low. Okay, and once you come off the low, then you go into your close, right? So that's effectively how a bar chart looks, but your body of the candle will be in the open and close part. Okay, so the color of the candle itself. Okay, so the opposite way then, if you're going for bullish, the open this time is more, towards the bottom end of the candle, so the open of the candle itself, followed by a false directional move down. Then the expansion to the upside, ready to create the high of that candle. Then you're going to pull off the high back into the close, okay, and then like obviously the body of the candle is going to be inside them two lines again, right, in the open and the close, okay. So that's how we sort of look at bullish and bearish bars, how we're going to use it and incorporate this into the strategy, okay. Okay, so for a bullish setup, all right, so this is what we're going to be looking for, okay. So we're always going to start with what we'd look at as a down candle, okay. This down candle is on a 4-hour chart, okay, so you need to stick to the 4-hour chart for this to work. Okay, the first candle we've got here then is it's going to be from 6 o'clock in the morning. So this is GMT. I'm going to go through the timings in a moment, but this starts at 6 a.m. And it goes up till 10 a.m. Okay, so the 4-hour candles, if you're in the UK, the market opens at 10 p.m. on a Sunday evening. Okay, so that's when it opens. So every 4 hours from 10 p.m. onwards throughout the day and throughout the week, that's when the 4-hour candle switches over again, okay, and that's also going to be sort of made a bit clearer in this video in a minute, okay. So we start off 6 a.m. all the way up till 10 a.m. right, so we're not looking for a trade at the moment. This is where we typically get the London Open stop run. That's where all the whipsaws take place, and you know, the things that are quite messy, okay. So once we've got that, then the 10 o'clock candle then closes, and the closes at 10 a.m. and it moves over to the next candle, okay. So the next candle then, you're looking for it to rally through the high of the previous candle, okay. So this is what we call an engulfing candle, right. Once you got that, then this candle then runs from 10 a.m. All the way up till 2 p.m, okay, so 1400 hours in UK time. Now once this candle closes, the next candle is then going to open, okay. You're then looking for that candle to first of all make its false directional move back down into the high and the open of the down candle, the previous down candle. So that's what we call a load level or an order block, right. Once it comes into that point there, that is where you're looking to get your entry point, okay. So you're going to go down to a smaller time frame, start to break it down and find your entry point at that point there, okay. Your stop loss, if you're not going to go down to a smaller time frame, your stop loss has to go below the low of the up candle, okay. So once you've got that there, then following that, you're then expecting price expansion to the upside, okay, and that is your trade for the 30 pips. Now don't be trying to hold it for 100 pips. Make your target something that's easy to hit, something that you can do consistently, okay. That's really important, right. So if you can't hit 30 pips a day consistently, you're not going to get 50 or 100 pips. So like, work on a smaller target first, something that you can get in, get out, do it every single day, 5 days a week. You're looking at 150 pips a week, so it's still pretty good return on that, okay. And the good thing about it is you're in and out pretty quick as well, okay. So that is for a bullish setup. Okay, so the next one we've got the bearish setup, right. So opposite way around to what we just had with the bullish setup, okay. So we're going to start off with our up candle, okay. So this is the one that's going to take place from 6 a.m. till 10 a.m. UK time, GMT, okay. Again, going back into the previous slides, talking about the London Open stop run and all that sort of stuff, that's going to take place in that candle typically, right, unless there's news for that day later on. So once you've got that, you're then expecting a bearish engulfing candle, okay. That's now confirming a smaller time frame break of structure, okay, because it's breaking the low of the previous candle. And then the next candle opens, so the bearish engulfing candle is going to be rolling from 10 o'clock in the morning till 2 in the afternoon, okay. So that's 2 hours into New York, okay. Once you get that, then you're then having the next candle, which is going to open at 2 o'clock in the afternoon, and you're expecting a false directional move back in to the open and the low of the load level itself, okay, the order block. Okay, so what you're looking for is a retest of that level. You're going to start hunting your entry in that point. Like I say, you can go down to a smaller time frame for better entries. This is where your entry is typically going to be on the retest of that, and your stop loss is going to go above the high of the bearish candle. Okay, once you got that, you're then expecting expansion to the downside. Again, take your 30 pips, get out, come back tomorrow. Okay, so don't be too greedy with it. All right, so they're the two bullish and bearish setups. Timings then, okay, I've just gone through the timings ourselves a couple of minutes ago. The load level is going to be setting up at 6 till 10 a.m. Okay, that's what you're looking for London. It is also like within the London kill zone or trade zone, but we're not going to be getting involved with that. Okay, so 6 till 10 is when you're looking for your load level setup. The engulfing candle is going to take place at 10 till 2. Okay, and at 2 o'clock then you're going to get the retest candle open, false directional move, whatever way you're looking to go, and then you're looking to take that between 2 and 6. All right, so you should have it within the first couple of hours, the retest, and then just let it ride for the 4-hour candle unless it already hits your 30 pip target. Okay, so I'm going to move over to the charts then, and we're going to have a look at the charts and see some examples. Okay, now we're on pound dollar, okay, on the 4-hour chart, okay, and we're going to go through this as a setup, right? So if you look at this down candle here and look at the bottom of the screen, you'll see that it's at 23rd of July 2021 at 0600, okay, so that's UK time. If you don't know how to set your time to UK time, go in the bottom of the screen on your TradingView account, and you'll see down here where it says time zone. You can click that, and you're going to go down to UTC +1, okay, and that's going to put you into the same time as what's on my charts right here, okay. So for those of you who are studying this, it just makes it a bit easier to keep track of where you are. Okay, so 6 a.m. candle then, this is the London Open candle. Okay, we're not really bothered by getting involved with that one at the moment, because this is where your stop runs happen, whipsaws and all that good stuff, right? So 6 till 10, that's the first candle. We're looking for the next candle to break its high, which happens right there. Okay, so the high of this candle is 1.37661. So you'll see it up here. Okay, so see this H, which is the high of the candle. So the high of this one is 1.37661, and the high of this one is 1.37681. Okay, so it's a little bit higher. Okay, so it did break it. And then what you're looking for then, you're looking for a retest of the open and also the high. Okay, so you've got the engulfing candle right there. You're looking for the next candle to trade back into it. Okay, and that's effectively what you're looking for. Okay, so if I go into this here, that did trade back into it, and then you're looking for your 30 pips. Okay, so let me just have a long position on here. Okay, stop loss underneath here, and then you're going to be targeting just 30 pips. Okay, now it's not about in this case the risk to reward. You can get a better risk to reward if you break down to lower time frames. Okay, but in this case it's literally just about getting 30 pips consistently every day. Okay, and it's quite an easy method to use. And also you got your time window right there. Okay, so candle retest, a little bit of drawdown, and then eventually hit target. Okay, that's GBP USD on one example there. I'm going to go on to the next one now. Okay, so now we're on Euro US dollar on the 4-hour chart. Okay, and this candle that we've got right here now is the 6 o'clock candle. So again, the London Open. You can see it's dropped down. So this is obviously doing some sort of stop run, possibly. The next candle we're looking for then, so this is 6 till 10. Next candle we're looking for is for it to engulf. Okay, so we've got that one here. This one's going to be running from 10 till 2. Okay, coming into the New York session at the end of that candle. We're then looking for a retest again of the high and the high in the open of this candle here. You're looking for a retest of that candle right there. Okay, so you're looking for retest, drop this down here, and then you're looking just for your 30 pip target again. Okay, so there's 30 pips right there. Okay, so once you got this, then you're looking for New York Open. Come back down. You can go to a smaller time frame to get a better risk to reward. All right, but the next candle literally just comes straight into the high of this one here, and then just blasts off right straight to target. All right, so that's within one candle. Okay, another 30 pip trade done right there. Let's go on to the next one. Okay, so this is a pound against Japanese yen. All right, so this is going to be a bearish example there. So the candle we've got here is the 6 a.m. one. So this is the London Open coming into London Open. And then what we've got then, we're waiting for the next candle to see what happens after that. Next candle breaks the low of it. Okay, so we're now bearish. We're looking for a retest of the low and the open of this candle here. Okay, we're looking for a retest of that. The stop loss is going to go sitting above the down candle's high, which is going to be right there. And you're going to be looking for your 30 pips, okay, which is right. Okay, let's have a look. right there. Okay, so 30.5. All right, so next candle literally opens right here, trades up into the bottom of this candle here, and then just expands down. Okay, now if you want to look for more pips, just get consistent at doing this one first. Okay, get your 30 pips, get out. When you get good at that, start looking for levels where you can start to take profits. Right, so for me personally, I'd be looking for this down candle to be retested there. Okay, that would have been my preferred target. Okay, so if I'd be looking for this here, okay, that would be mine, and then it hit there. Okay, so that would have been 94 pips. Okay, so it's just trading from one low level to another, right? But get consistent at 30 pips, and then move on and do the next one, and eventually you'll be able to get bigger targets, right? So that's another example. We'll go to the next one. Okay, this is US dollar, Canadian dollar on the 4-hour chart. Okay, in this candle we've got here again, 6 a.m. Okay, waiting to see what happens to the next candle right there. Trades lower. Okay, so we're breaking the structure of this candle right here, and now we're looking for a retest again of the low, which is right here, and the open. Okay, so we're looking for a retest of that, and then we've got the short position. Okay, preferably on the bodies. Stop loss would go above the high of the down candle. Okay, and we're just looking for our 30 pips, which is right there, 30.2 pips right there. Okay, so next candle, we're looking for a retest of this level here. Okay, and if I zoom in, you can see it came up into it here, right there. So this candle opened, traded up into the body of this candle here, then traded lower. Okay, straight to target. Right, so again, another example of a short position. Right, so that's it for these examples. Okay, so that's it for the strategy then. If you guys are interested in joining the group, there's a link below this video. Okay, you can join for 14 days, join our group. If you do decide to continue with that, we are developing a smart money trading system. Okay, it is going to be built on MetaTrader 5. We're moving away from TradingView because it's very limiting on the code that we can put into it. Okay, so we're going to try MetaTrader 5 with the development itself. You can also go to decisionofpower.com. Go to the bottom down, right down the bottom of the page, and you can see a silver membership 14-day free trial. Okay, you can come in there, have a look how we trade, and you're also going to be able to look at how we identify targets. Okay, so different load levels, price acceleration zones, equal highs, equal lows, and that's going to give you another way of opening up that risk to reward on your trades, right? So you'll have to hold it a bit longer, but at least it's going to give you better opportunity for profits, right? So that will do it for this video. I will see you in the next one.